Hi guys, welcome back. We're Agents Lane, and today we're going to talk about transition, and really that is the state the real estate market is in right now nationally as well as in Los Angeles, and we're going to get into a few reasons why this is happening right now. So let's talk about the sellers first. On the seller side, we're still looking at historically low inventory. We're literally 63% less inventory right now than we were last year at this time. So that's active listings. In addition to that, if you look at the 10-year average, last year we were down 50% from that already. So you're looking at historically low inventory rates, and that's going to keep the prices pretty stable for a while.
Brian, what do you hear from sellers why they don't want to move?
Why sellers don't want to move? I mean, a few different things are going on right now. One, they've locked in great interest rates already. A lot of the buyers have got great interest rates, or they refi to a great interest rate. So you're looking at people who are sitting on 2.65, 2.75, 3% interest rates, and they don't want to shift that now because guess what? The new rate is
almost
5%, right? So that's a big deal, big difference for someone who would want to sell. Also, I think just the instability of the pandemic for the last couple of years, and now the recent economic instability we're facing, people just want to sit tight. So that's really forcing people not to sell.
I would agree. So for the buyers, the demand for buying is super strong. It's been strong for the past decade. In the past 2 years, it's been even stronger. Right. We have way more buyers than we do properties. But there are two factors that are making that maybe change a little bit. One is the interest rates. Remember, just 3-4 months ago, the rates were 3.25, and now they're almost at 5%, sometimes 5.25, depending on the property and your own situation financially. So that's number one. Number two, then the other looming issue with buyers is inflation. Everything's just costing more, right? From gas to bread to everything. So they're just being a little bit more cautious. What is interesting and what we've seen just recently is that buyers are probably going to go back to the adjustable rate mortgages because the 7-ARM, for example, is at 4.3 compared to a conventional loan or a jumbo loan, depending on the rate, is up to 5.25 and as low as 4.75.
So what does all this mean for the Los Angeles real estate market? First of all, just because the inventory is so low, we are not going to see prices plummet. That's not what's coming in the near future. It would take at least 6 months of inventory buildup to happen for us to see a balanced market, which is really where the homes are sitting on the market for over 50 days. We are not there. We're under 30 days right now. So it's a long ways away on that particular piece. So right now we are seeing a slowdown in the bidding wars on properties. It's not 14, 15 offers. It's more 2-3 offers on a property. So what does that mean for the market overall? Are we going to get a big price drop here, or what's going to happen?
I wish I knew, right?
Right? Crystal ball.
Yeah, the crystal ball tells me. So I personally don't believe the prices are going to drop, nor do the real estate experts. What we are thinking and hoping is that we have less appreciation as opposed to 14% appreciation like we did in March. From March 2021 to 2022, there was a 14% appreciation. We're hoping to appreciate 3 to 5%. That would be more of a stable market. So remember, this market is nothing like 2008. We don't see the prices going down because the lending this time around has been so strict, and everyone that qualified well, and everybody has a lot of equity. And unless there is a huge recession and huge unemployment, then it's a different story.
Sure.
But for now, fingers crossed.
Fair enough. Remember, if you want the latest in LA real estate, subscribe below. We do an update twice a month. Thank you so much.